This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. In custody, Sam Bankman-Fried is arrested in the Bahamas after the U.S. government files a criminal indictment. The co-founder of FTX now faces possible extradition. Inflation focus. As the Fed begins its two-day meeting, investors also await U.S. CPI data that may shape the outlook for rate hikes into next year. European indices are mixed in early trade. Plus, cutting headcount. Goldman Sachs is said to be planning hundreds of additional job losses as it restructures its struggling consumer business. Now, first thing is first, we have a number of stories we want to get to, but let's check on the markets. It's all about that CPI print. And when you look at European stocks, much like U.S. futures, they're pretty much unchanged. So we're seeing a flat Europe 600. Again, I guess the focus is because of forecasts, inflation from the U.S. and the fact that actually we're expecting it to post the lowest figure this year, therefore possibly warranting a less hawkish Federal Reserve. We're seeing a little bit of bounce back for U.S. futures. Certainly, they're pretty steady. And then I would watch, of course, for any dollar strength. 1,265. We chose the U.S. dollar index. We could have chosen euro dollar. We'll show that a little bit later on. Now, the dollar fell against all G10 currencies as traders turned wary ahead of U.S. CPI today. That seemed influencing the Fed's rate path. So that's the big picture across the board. And then sterling, you can see 122.70. We also had some pretty extraordinary wage figures out of the UK. What's interesting is that inactivity from older groups is also slowing down. So more people returning to the workforce. We don't know whether that's long-term COVID abating a little bit or whether it's actually because of the cost of living crisis. Now, for more on all of this, we're joined by Eddie van der Veld from our Markets Live team and Deputy Chief Economist of Althea Capital. She is Sharmila Whalen. So, Eddie, let's start with you. When you look at the data, I mean, it's all about CPI today. Frankly, no one cares about anything else unless we have a big piece of news. What are you expecting from CPI?
Yeah, absolutely. I've never seen this much anticipation of a data point, frankly, as I have seen for the CPI just this month. But I think that makes sense, right? Because I think our Santa rally depends on it this time around. If we don't get a downside beat here, then I think you're going to really struggle to see stocks pushing on towards year end, which is what, I think the market really is hoping for. But I think there's a lot of caution to be had about this number, because for this month, for a change, we had the PPI number before the CPI number, and those two have a very high correlation. But the PPI came in hotter than people expected. So I think anticipation is for a good reading. I think the market may just be a little bit disappointed.
But Eddie, overall, and we're seeing the split also, with the FOMC members, is that how long can Jay Powell continue rising interest rates? And this boils down to basically, even if we see a tempering of inflation, even if it's coming down, it's not going to come down as quickly as it went up.
Yeah, absolutely. Look, I think the Fed, obviously, I think whatever they're going to do this time around, they're going to do this time around. I don't think the Fed's path is going to change at this meeting. I think what we're talking about now, when we get today's reading is the terminal rate. And the terminal rate, I don't think is by any stretch of the imagination baked in. We've seen how much that's adjusted over the last year. So I think what we're really talking about is what they're going to do next year. And I think, therefore, there is a lot of scope for changing the Fed's thinking.
So, Sharmila, what's your take when you look at, and welcome to the program, when you look at what we're expecting from U.S. CPI, could it actually change the way we look at all asset classes?
I don't think so at all, Francine. I agree with Eddie that, Powell has obviously signaled that rate increases are going to moderate. The market is widely expecting a 50 basis point increase. But this is not going to, A, interest rates have not peaked, and B, this is not going to save the U.S. economy. It is still headed for a recession, and the markets are behind the curve in terms of earnings adjustments.
We're also getting some earnings news, so I'll get to that in a second. But Lufthansa shares are rising 3.5% after it's raised its earnings forecast. It's actually now seeing full-year adjusted EBITDA. A bit jargony, but it's basically better than it was expecting it before. So they're now seeing that figure at 1.5 billion euros instead of the 1.1 that we were expecting. Overall, Sharmila, and I know we're here to talk about, inflation, CPI, and data, but it does seem that there's a big boost to a lot of the airlines. We heard it from IATA. We heard it, of course, from Lufthansa right now. Does it give you hope about the world economy going forward?
Absolutely not, is the short answer. And I know that's a bit strident, but, this cost of living crisis is acute. It's going to get worse. And, there's going to be nothing left for discretionary spending, right? And, things like Lufthansa Airlines, its travel and discretionary spending. So if it is rallying, it's rallying in a bear market. And I would look at it as an opportunity to sell off and get out.
Okay, and did you agree with that? I mean, when you look at discretionary spending, and again, for the moment, there are certain countries where saving has been quite significant in terms of the portion of what's inside the bank.
Yeah, you know what? I'm a little bit more optimistic about the world economy as we go into 2023. I think on the one hand, I've had three tenets for which can bring us this positive surprise. One is China reopening. That's already happening. Number two is Europe avoiding an energy crisis. I think slowly but surely we're learning that while the winter is cold, Europe seems to be passing that first test. And the third is a more dovish Fed than the market's expecting right now. I think that if we see a US recession, it will be a Fed-engineered recession. And therefore, the gift is in the Fed's hands to avoid it. And I think 50 basis points now, an even slower pace of hikes going forward.
Sharmila, how ugly do you think the US recession is?
I think we are looking at a downturn, but I think Europe is looking at a bigger downturn. I think Europe is going to be the epicenter of this global downturn. It's this real wage squeeze that you're seeing, right? And again, the savings, there were huge savings buffers created during the pandemic, but what is astonishing is how quickly they're disappearing. So if I can just give you two numbers, if you look at the European household savings rate, it peaked at about 25%, and now it is at 13%. If you look at US household savings rate, it peaked at 29% of disposable income. Now it's at 7.4, which is below the long-term average. So where is the spending coming from? And if there's no spending, it's going to hit corporate profit margins with the input price increases as well, and that'll have knock-on effects on investment as well.
But Sharmila, as long as the job market actually remains resilient, and that's a big question, do we kind of muddle through even in Europe?
See, I think job market is always a lagging indicator, right? And you're absolutely right. Even you look at the UK, the unemployment numbers at about 3.6. The numbers still very, very low. You saw the US jobs market data out last week, which was better than expected. But I think it's early days.
Eddie, when you look at UK jobs, actually, this was quite incredible. Looking at the pressure on wages, how much does it complicate the BOE's job?
Yeah, absolutely. Look, Cheryl makes some really good points there, and I do think that there is prospects for weakness, but the jobs market, as you point out, particularly in the UK and elsewhere, is still really strong, and it makes it really hard to make the case that we're about to hit a recession if the job market is doing really well. But there are worrying indicators, and things like the in the UK in particular, the housing market I think is a big swing factor. But I think the flip side of that is, even if we do see these recessions hit, particularly in Europe, maybe in the US, I think they might not be as severe, and asset prices may already have baked in a lot of that bad news. So I think as we go into 2023, investors might start turning a lot more positive.
All right, Eddie and Sharmila, thank you so much for joining us. Eddie van der Wout there from our Markets Live team and Deputy Chief Economist at Althea Capital, Sharmila Whelan. Now, coming up, Sam Bankman-Fried is arrested in the Bahamas. We'll bring you the latest on the fallen co-founder of digital asset exchange FTX. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas at the request of the U.S. government. His arrest comes after weeks of speculation that client funds were misused before his empire's collapse. Now, for more on all of this, let's get straight to our Bloomberg senior crypto reporter, Joanna Ossinger. So, Joanna, good morning or good evening where you are. What do we actually know?
Hey, Francine. What we actually know is that we're going to know more in a few hours. We don't have a lot of details about the criminal proceedings from the federal prosecutors. They're unsealing those in the U.S. morning, so we'll find out about that. There are also some civil charges that the Securities and Exchange Commission is going to bring relating to alleged violation of securities laws. So we should be getting more information on that as well. And we'll find out exactly what the Bahamas is intending to do. We know, of course, that they've arrested him, but we'll be possibly getting more information on exactly what the process might be with the potential extradition and other things that the Bahamas intends to do.
So where do the other investigations into FTX actually stand?
Well, there aren't a lot of details on other investigations outside of that at this point. And of course, there could be all sorts of things related to the other entities, other places, other countries in the world where FTX might have had operations. But right now, the main ones, it looks like, are from the US. And some people have been saying it's possible that they have some pretty strong evidence if they've moved this quickly. It is just about a month after this whole thing went down. So that's pretty quick in legal terms, but that's the main thing. We also do have the U.S. House hearing that will go on, even though Sam Bankman-Fried isn't going to testify as he was intended to do. We have the U.S. Senate hearing on Wednesday. Sam Bankman-Fried had said that he had not intended to be at that one. So we do have other things from the legislative side as well, but it looks like the U.S. cases are the ones that are coming in the fastest.
All right, thank you so much. Our Bloomberg senior crypto reporter, Joanna Ossinger. And in interviews since the collapse, Bankman-Fried has admitted major managerial missteps, but that he never tried to commit fraud or break the law. Now, Bloomberg has learned that Goldman Sachs is drafting plans that could cut at least 400 jobs from its loss-making retail banking operations. The retrenchment comes as the Wall Street titan restructures its struggling consumer business and braces for an uncertain economy next year. Now, for more on all of this, let's talk to Bloomberg's Marion Haltofmeyer, one of our wonderful reporters who breaks a lot of news on the banking sector. So first of all, Marion, good morning, and it's nice to see you in London. So can you talk to us about actually how many job losses or job cuts can we expect at Goldman Sachs?
So we're looking at about 400 or so job cuts, specifically for their consumer banking unit. Now, this goes a bit beyond what we're seeing across Wall Street right now, where a lot of bank CEOs have been warning, look, we're not expecting a great outlook for next year. Markets are down. You know, we might see some cuts in jobs and bonuses coming down. So, but this goes a bit beyond that in the sense that Goldman has recently been withdrawing from this consumer banking strategy that they had put in place. So this kind of shows that they're not so hot on this topic anymore, and they're going to be calling back there.
So is this, I mean, and you mentioned this is one bank and many that are actually cutting jobs on Wall Street, but is it, you know, Goldman specific, or do you think this is a wider trend overall?
I think this particular case, it's Goldman specific. This really goes into, they had this whole pitch to go into retail banking to try to be a bit more Main Street rather than investment banking Wall Street. But it does play into this whole idea of austerity and cost savings as well.
Marion, you're also one of the reporters that breaks, of course, the most news on Credit Suisse. Yesterday, we heard the departure of, I think, the head of Greater China and other departures here in Europe. Like, where do we go next on Credit Suisse?
Listen, I think they're trying to make it to the end of the year without another big news, but we're really going to be looking at how are they going to implement the restructuring next year. You know, we're going to get some news on whether or not they're entering the next phases of the cost cuts and job cuts, and then we'll see how bonuses look for them as well. I mean, it's not going to be great, and they're going to need to try to hire some more talent as well, which is not a great environment right now.
Yes, do they need to pay them more to make up for, I guess, reputational damage?
There is that color coming through of just having to retain bankers, particularly for the Credit Suisse First Boston angle. They're kind of having to pay up and poach people from different banks. Otherwise, you know, people are leaving, and it's a bit hard to pay up at this moment. So,
I mean, will they be relieved that actually the rights offer is like behind them, and so they can actually focus on execution of the plan?
I think they're definitely going to be relieved to stop seeing the stock price swing so much, and they can focus on execution. They've got the money in the bag, but they have to work a bit harder on convincing investors about this plan.
All right, Marion, thank you so much. Marion Hofmeyer there, one of our banking reporters, usually based in Zurich. Now, coming up, we'll have plenty more on the UK and, of course, the wage pressures that we've seen across the board. So we look at gilts. We also look at what else is going on in the UK. We speak to Bettina Schaller, president of the World Employment Confederation. That interview coming up shortly, and this is Bloomberg.
This, with regard to security of supply, it's not a yes or no situation. It's not a binary one. Security of supply is important to the continent as a whole. We have to keep gas flowing to Europe. So that means that if we have an intervention, that it should be linked to the world markets.
Well, that was Belgium's Energy Minister, Tine van der Straeten, speaking to Bloomberg TV about an EU price cap on gas. Now, European countries are also meeting in Brussels today to really reach a preliminary agreement to clear the way for Ukraine to receive crucial aid from bloc after Hungary dropped its opposition. That's actually the event in Paris. The other event we're watching out for is the EU trying to seek to break a deadlock over capping natural gas prices. So the plan to intervene in the market, basically unveiled by the European Commission last month, has caused a deep rift amongst member states. So we're watching for any live pictures coming out of Brussels to see whether there is agreement. Of course, there's, again, a couple of different blocs, countries led by Germany, the Netherlands and Denmark, calling for a pretty cautious approach. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's warning it faces a steep surge in COVID cases as it rapidly dismantles pandemic controls, with one of the country's top virus advisors saying a jump in infections is, quote, surely unavoidable. Hong Kong, meanwhile, is removing its 3-day ban on international arrivals going to bars or eating at restaurants and scrapping a contact tracing app used for entry to public venues. Now, EU nations have reached a deal to clear the way for Ukraine to receive 18 billion euros in aid after Hungary dropped its opposition in exchange for a reduction in penalties over graft concerns. Other countries also agreed Hungary's pandemic-era recovery plan, which entitles it to 5.8 billion euros in grants. Budapest will still need to implement measures to bolster the rule of law. Bloomberg understands some 600 members of Britain's armed forces are being trained to drive ambulances, with the military also asked to cover for border guards. This as the government warns of significant disruption to the UK's health service as nurses and ambulance staff prepare to go on strike in the run-up to Christmas. Workers in across several different industries are striking over pay, given the rising cost of living. And China has filed a dispute with the World Trade Organization against US export controls on microchips. Beijing says the restrictions threaten the stability of the global supply chain. Meanwhile, Bloomberg has learned that Japan and the Netherlands have agreed in principle to join the US in tightening export controls on chip-making gear destined for China. The two countries are likely to announce measures in the coming weeks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now we're looking at currencies. Of course, currencies never dull, always interesting. I'm looking at dollar. Look, the conversation on dollar is definitely what the Fed does on the back of that CPI figure today. If you look at what the markets are expecting, we had a beautiful piece of Bloomberg Intelligence looking at what the Fed will do in terms of hikes. The Fed could slow hikes to 50 basis points, and that, of course, has implications for dollar looking forward. We had another piece of research saying that in 2023, the dollar looks set to weaken against Asian currencies for the next 12 months. Now, the other piece of news, of course, we're watching out for, it's what's happening in Paris. Now, the European Commission, Ursula von der Leyen, talking at the moment at the Ukraine Donors Conference our Maria Tadeo on the ground there, trying to quiz leaders across the world about what exactly the plan for reconstruction going forward is. We know that she'll also be speaking to Emmanuel Macron, and this comes 12 hours after European Union countries reached a preliminary agreement to clear the way for Ukraine to receive a pretty crucial aid from the bloc after, for example, Hungary dropped its opposition. Coming up, fresh UK employment data is out. We'll discuss it with Bettina Schaller, the president of the World Employment Confederation. That interview up next, and this is Bloomberg. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, UK data this morning showed wages are rising at the fastest rate in over 2 decades, excluding the pandemic, putting pressure on the Bank of England to keep hiking rates. The jump also reflects a chronic labour shortage in the UK. I'm not sure why we're seeing pictures of Sam Bankman-Fried, but that's our other big story. So we look at wages, wage pressures, what that means for employment, and of course we look at the fallout in the crypto world. Now, to talk more about wage growth and, of course, the place for the labour market being so tight in the UK and elsewhere, we're joined by Bettina Schaller, president of the World Employment Confederation. Bettina, thank you so much. As always, I'm really looking forward to our interview because you always make us smarter on some of the underlying currents in the labour market. So looking at it from where we are, it's a tight labour market, frankly, in G7 countries. Wage pressure is really extremely high because of the cost of living crisis. How bad, first of all, is the skill shortage in the US, in the UK, and elsewhere?
Well, I'd love to give a good news here, but the skill shortage is bad. It is bad, and it is bad due mainly to 2 major factors that are pushing businesses out there to transform. One is obviously that digital, the technology piece, and with COVID, we've seen it. People are required to have more and more skills in that space, and they just don't have it. So there's a big lag when it comes to the skills there. But then we're also seeing the green transition as one of the factors that causes that lack of skills of workers in the market. So that skills mismatch is a real issue, and it's one we need to act fast on. We need to get governments really active on identifying policies that will allow people to get re and upskilled even more than now. We've been talking about it for years, and we see certain activity, but that is not fast enough. And actually employers as well need to act fast on that one.
But Bettina, who's getting it right? So here in the UK, for example, I mean, the wage price growth was really pretty incredible. And we're seeing, for example, some of older workers coming back into the labor force. Is this because of the cost of living crisis? Or are we going to see that trend in other G7 countries?
I mean, look, older workers will be coming back to the workforce. Why? Because there's another trend that is looming, and that is just the effect of demography, right? I mean, we will be missing out workers in the labor market. So that's going to happen in any case. If you ask us getting it right, well, it's those countries, again, that, are able to link the requirements of the labor market to what the education industry, if I may say so, is actually providing. So there we see the biggest adjustments as it is. Now, on the wage spiral, because you've alluded to that a few times, we actually, to be honest, we don't see such a huge, massive effect there everywhere. The UK, yes, there it is an issue. And of course, wage inflation had to adjust to overall inflation. We've seen the same in the United States. So UK and United States are the 2 big countries. There's only 2 countries where there is a link of inflation to wage inflation. That's Belgium and Luxembourg. But in other countries, and mainly those countries that have collective bargaining and negotiation at the heart, things have actually been slower. What I'd also like to say, Francine, of course, we talk here generalize in general terms. Always have to differentiate, though, right? Again, per countries and by sectors. So there's certain sectors where things are a little bit more stable.
Bettina, when you talk about the risks of a wage price spiral, and this frankly is the nightmare of every central bank around the world, are we there yet? If you look again at the price, even the strikes that we see in the UK and this price spiral in the US, have they lost control?
Francine, who am I to have the silver bowl on this question? But again, if we look around, to other countries, we don't see it, that harshly. So we think that overall the economy is going to slow down, right? I mean, that's going to happen, and the demand for labor will also slow down. Bigger employers are hiring more selectively. As I said, they need to watch out these days. So they're really going for those roles that they need. And I mean, central banks, they are tightening their monetary policy, aren't they? So, overall, we hope that break on inflation, that it will come. And so that wage spiral, as far as we see, might not be as bad as expected.
Yeah. So, Bettina, I mean, this is, no one has a crystal ball, so I know I'm asking difficult questions, but how are you expecting, the labor market force to go in 2023? Are there going to be industries and sectors that will start back hiring? If you look at technology, it seems they're losing jobs. If you look at finance, it also seems we're looking at cost cuts and job losses.
Yeah, look, the adjustments are happening, right? And this is really what this is all about. I mean, the technology sector clearly has been losing jobs. We see what many other people see there as well. It's been an adjustment, right? There's been some planning there, and obviously some course correction that is happening there. Having said that, we're actually super excited about all this tech talent that is, let's not say flooding the labor market, but that is out there now, because there's a lot of sectors that need exactly those skills. In terms of, therefore, industries, I mean, to us, still information and communication are areas that are going to grow. Activities, electricity, gas, steam, air, an air conditioning supply. I'm looking at here. Real estate is going to grow. Actually, financial insurance is going to grow. So we still see areas and industries that are going to grow for sure.
And Bettina, across the world, and again, I know it's very different, but we keep on talking about a skills shortage. Are governments, really around the world, especially in developed markets, just behind in getting their workforce up to scratch in terms of the skills needed?
I can say they're generalizing, yes, they are. Yes, they are. And there's another correlation that we also see, and that is linked to how private employment services can actually unfold their activities, because this is actually the moment where you need those specialized actors who can help facilitate or bring a solution to the situation as it is. When it comes to helping employers to review what the issues are, so when it comes to adapting sector-specific approaches to the staffing and the skills shortages, when it comes to actually delivering agile solutions, this is where we see a lot of governments not actually embracing that there are certain players in the market who know how to do this and who obviously now are best placed to step in as well.
Bettina, as always, thank you so much for joining us. Bettina Schaller, there, President of the World Employment Confederation, joining us this morning. Some great insight. Now, Ukraine's Prime Minister and France's Finance Minister Bruno Le Maire are also due to speak at 3 p.m. UK time at a discussion moderated by Bloomberg's Maria Tadeo. It's going to be a great panel, of course, looking at, the EU yesterday breaking logjam on Ukraine aid with the deal, and this is after Hungary dropped its opposition. So we'll have a full roundup also on some of the reconstruction help. You can watch that panel using the Live Go function on your Bloomberg terminal. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance early edition of Francine Lacqua here in London. Now, we're getting a couple of breaking news. First of all, China, left, right, and center, really as China bracing for many COVID infections over the winter. It's now said to delay the economic policy meeting amid the COVID surge. We're also getting a number of reports from banks with trading desks really being left empty. We'll monitor the conversation and, of course, the situation in China. Then the other story, Goldman Sachs shifting some of its Euro swaps trading desks from London to Milan. Now, it's the latest example of roles moving to continent after Brexit. Now, former Italian Minister of Education Letizia Moratti is currently visiting London to tour the city and drum up more business for Milan. Now, Letizia was also mayor of the city between 2006 and 2011, previously served as chairwoman of UBI Banca, and she joins us now. Letizia Moratti, thank you so much for joining us. First of all, it's great to see you in London. I know you're here to also drum up support for Lombardy and other parts of Italy. You recently left a very key role for the Lombardy region. Why was it no longer right to be in that center-left, center coalition? Really?
Thank you, Francine. Thank you for being here. First, let me say that it's great to be here in London. I met yesterday very important financial investors, both Italian and international, to bring to Lombardy region investments. We are discussing to raise $1 billion investments to help the development of the southern region of Lombardy, south of Milan. There are important areas that need to be regenerated with housing, with infrastructure, with commercial activities, with a research center. And I'm happy because the yesterday meeting was fantastic. So I'm really thrilled about this opportunity.
And is this UK investors, and do they have questions about the current political climate in Italy?
Well, they are international and national investors. They look at Lombardy region in a very positive way because of the stability of the Lombardy region, and because, if I may, Lombardy region could be seen as a AAA. So it's, there are no problem on investing, and we are really discussing about this. And of course, I'm happy that Goldman Sachs has decided to move the swap trading desk, of course, the swap trading desk, but others are moving or reinforcing hiring in Milan, like Citibank, like Morgan Stanley, like, and others will come. So this is because Lombardy region is a fantastic region in terms of connection with the rest of the world.
I mean, let's see, many questions also, though, about the political system. So you recently left the center-right coalition. Why?
Well, because I was in disagreement with the policy of the government about vaccination. So this was the reason. Lombardy was the first region that was hit and very hardly. So I think that we cannot, we have to be careful and protect our vulnerable people. And therefore, I was in disagreement, and that's the reason why I stepped down.
Do you see another COVID emergency, actually, as we get into the winter, into early 2023?
I think we have to be careful. I think we still need to have protections, especially for vulnerable people. I think we need to have to let people understand that the protection are needed in order to not to have problems like the one we had before vaccination. When I came into the region, I came to protect people, and the problem were quite high. I succeeded in a very good plan of vaccination, which put the Lombardy region first in Italy and among the first territories. But now it's not just COVID. I mean, COVID is something very important, but COVID and the war in Europe and the energy cost are putting us in a condition to try to develop and build a better environment for families, for companies to be competitive in a very competitive environment. That's why I'm here, because I believe that the link with the financial institutions is key for them.
Yes.
Absolutely.
But you also have political ambitions, and you're one of the most respected businesswomen in Italy. What exactly do you think Italy needs now in terms of the relationship between, for example, Italy and the EU, Italy and the rest of the world?
Well, I think, yes, we need to be to understand that Italy can play a very important role in Europe. I think, unfortunately, we had Mario Draghi, who was a fantastic leader, but I still think that Italy, with being a founding member of Europe, can play a very important role. I believe that the region can play an important role because in some way European Union is a rigid model, and the veto rights of countries are sometimes impeding Europe to be more dynamic, which is what we need now. I mean, Europe needs to compete with the rest of the world, and we don't have raw materials. We are a transforming economy in Europe, so I think that the role that regions can play, being a sort of macro region together, connected with infrastructure and relate and putting the resources and the talented people and everything that we region can put, this could allow Europe to be more competitive.
We have a new government in Italy. How do you think they're doing?
Well, I think that in terms of the governments, I think, need to be consistent with the European, what Europe is asking, meaning that we have to comply with the PNR requirements, the milestone, and I think the government will have to comply and to be coherent with the reforms that Europe is asking to Italy and that are important for Italy. It's not just important for the government, they are important for Italy. Reform on public administration, reforms on justice, reforms on all the reforms to simplify the way you do business, the way you serve people. It's an important part. So I think PNR is an important opportunity. Pity that the government is not decided to take the money of MES, which could be very good for health, but okay.
Okay, so the jury is out, I guess, is maybe how we describe it. Letizia, thank you so much for joining us. That was Letizia Moratti, the former Italian Minister of Education, Universities and Research, amongst many other titles. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources tell Bloomberg that Goldman Sachs is planning to cut at least 400 positions from its loss-making retail banking operations. The plan goes beyond the bank's annual exercise of weeding out underperforming staff. CEO David Solomon has also recently signaled he's reviewing other divisions to manage headcount and also limit costs. Microsoft has offered its rival Sony the right to sell the blockbuster Call of Duty as part of its gaming subscription service, as part of a bid to win regulatory approval for Microsoft's $69 billion purchase of Activision Blizzard. Sony has not accepted the proposal and has been a staunch opponent of Microsoft's bid for Activision. Oracle has reported revenue ahead of estimates off the back of a strong set of results from its digital health records unit. The US software giant's sales increased 18% to $12.3 billion in the 3 months to the end of November, overcoming a general drop in demand for IT services. Cloud revenue did rise 43%. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Coming up, EU nations reach a preliminary agreement to clear the way for Ukraine to receive crucial aid from the bloc. We'll get the latest from Paris, where an international conference to raise money for Ukraine is taking place. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, EU nations have reached a preliminary agreement to clear the way for Ukraine to receive crucial aid from the country, from the bloc, after Hungary dropped its opposition. Well, meanwhile, France is also hosting an international conference to raise money for Ukraine today. President Emmanuel Macron welcomed the Ukrainian Prime Minister along with a big delegation.
We want to help the Ukrainian people to resist through this winter. Concretely, we want to give commitments to deliver generators, help repair infrastructure, deliver LEDs for lighting, etc. So this is very practical, because today, at the heart of Russia's offensive, is to plunge the Ukrainian people into despair.
And in the morning, the conference will take place, of course, at the Foreign Ministry. Now, later on, Bloomberg's Maria Tadeo moderates the business part, taking place at the Finance Ministry. Maria joins us now from Paris. Maria, great to have you on the program. So Emmanuel Macron hosting this conference in Paris. What can we actually expect from it?
Yes, Francine, and this is a pretty big deal for the French government today, which has really rolled out the red carpet for the Ukrainian delegation that is being led by the Ukrainian Prime Minister. We also heard from the Ukrainian President himself, Volodymyr Zelensky. Now, the French President says a conference like this at this point, it's important because the West needs to look to the future, to life after the war, to begin working and pulling resources to rebuild this nation. And Francine, you know the numbers that have been thrown out there are incredible. At one point, some suggestion that this could be a $1 trillion effort. The other issue, and this is on the medium and short term, is the power generators, helping Ukraine to deal with a very cold winter. Emmanuel Macron says he wants to see a real concrete proposal come out of this meeting today that has been happening or is going on underway in Paris for this terrible situation that is going on with the lack of power, the rolling blackouts for Ukraine as temperatures go minus. There will also be a business part, and we will debating or dedicating a summit with the French finance minister and the Ukrainian prime minister about connecting the two sides on this huge, massive fundraiser effort.
Yeah. So, Maria, how much of this is about the money and how much of it is just to make sure that people keep on talking about Ukraine and the reconstruction efforts on infrastructure?
Absolutely. And Francine, I really think you nailed it on that point, because the French president also said that this is not just about the cash. It's not just about talking money. It's not just about bringing all of this funding together, connecting companies, but it's also about sending a picture and sending a message to the people of Ukraine, quote, that they are not alone, that they have not been forgotten. This war now in its 9th month, the French president says, continues to be a priority. And of course, no one in Europe will be safe until there is peace in Ukraine.
All right, thank you so much, Maria Tadeo, there with the very latest on this conference. And then watch Maria's great panel. Ukraine's Prime Minister and France's Finance Minister Bruno Le Maire are due to speak at 3 p.m. UK time in a discussion moderated by Maria Tadeo. You can watch that using the Live Go function on your Bloomberg terminal. Now, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kailey Leinz in New York. Our Anna Edwards is here in London, and this is Bloomberg.
Whilst things have certainly accelerated in the last few hours, I think many will feel, in fact, like Sam's arrest is in fact overdue. We need to flush out the bad actors. We really need regulation and to show that rule of law is important.
It's really a landmark case, and it will, in many respects, define crypto regulations for exchanges going forward.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas. U.S. prosecutors filed criminal charges and will now seek his extradition. Investors waiting for today's U.S. inflation data. The CPI print could shape the outlook for Fed interest rate hikes. And more job cuts on the way at Goldman Sachs. Hundreds of positions are likely to be cut from Goldman's money-losing retail banking operations. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, the session in Asia, some moderate moves there, modest moves here in Europe, really. We wait for the US session to really kick in, and certainly the data in the US session will be front and center, as will the crypto news flow.
Yeah, we'll definitely be watching those FTX hearings on Capitol Hill beginning at 10 a.m. Eastern time. But before we can get there, Anna, we have to get through CPI at 8:30. And really the trajectory of inflation and what it means for the trajectory of Federal Reserve policy next year is really what the market is waiting for clues on. So as you said, not too much movement and conviction in Asia overnight ahead of that print. Yes, we were higher, but only by a modest about 0.2% on the MSCI Asia Pacific Index. Where your outperformance was coming from was Hong Kong. The Hang Seng up by about 0.7% as we continue to get incremental reopening news. Hong Kong scrapping that 3-day COVID monitoring period for incoming international travelers. So that lifted travel stocks in particular like Cathay Pacific, the airline, which was higher by about 3% overnight. Finally, in the bond market, as it is an inflation day in the middle of a big week for central banks, we are seeing a little bit of upward pressure on yields. At least that was the case in the Asia Pacific. And New Zealand, the 2-year yield up about 5 basis points overnight to 4.67%, Matt.
All right, very interesting stuff. Right now, we're looking at gains on futures of just about 0.1%, but you're not going to see really a lot of movement in risk assets until the CPI print comes out. Then you could see a lot of movement in risk assets. In fact, over the past 6 CPI releases, you've seen the S&P 500 move 3% or more in either direction. So you've got a lot of volatility ahead if you are to judge by history. The U.S. 10-year yield right now coming down just about 1 basis point to 360.19, so not a lot of movement there either. There has been a lot of movement in crude. Yesterday at this time, we were looking at a 70 handle for WTI. Today it's 73.66. So since, in the past 24 hours at least, we've seen crude go up by about 4% to 73.69 a barrel right now. And then Bitcoin also continuing to gain right now, 17,382 after the arrest of Sam Bankman-Fried. Maybe some in crypto land feel that we can put a pin in that and move forward. So it does look like we continue to increase from the really unbelievable stability that we saw over the last month since the implosion of FTX. Anna, what do you see in Europe?
Yeah, it sort of fell fast and then didn't fall anymore, did it, Matt, on the Bitcoin front? Let's have a look at the European map then, Matt, and it does look like a holding pattern waiting for that CPI print later on today. That is the macro event of the day, and it is what we're waiting for. London is flat, Paris is flat, Frankfurt is up by 0.2%. Speaking of Frankfurt, we just got some German data. The ZEW investor expectations coming in at minus 23.3. So this is a survey of finance professionals and their expectations for the period ahead. It came in at that minus figure of 23.3. The estimate was minus 26.4. So maybe at the margin, just a little bit less gloomy than had been anticipated. Still a negative reading, still dominated by concerns around energy prices in Europe and the extent of the slowdown and recession that we are seeing in Europe. In terms of where the stock action is today, it is related to this. Brent crude up by 1%. And these are the energy names moving higher as a result. So once again, a day where we see not a great deal of news flow to trade around perhaps here in Europe, but we do have some movement on the oil price. And as a result, energy stocks go higher, up by 0.8%. We've heard from Russia, some Russian media reporting that they think they know what the Kremlin has decided when it comes to the oil cap, and they think that the Kremlin's decision there will be not to trade with countries that have signed up to that oil cap. Some of them don't want to trade in Russian oil anyway, but also not to trade with any country that references any kind of threshold. We'll wait for confirmation from the Kremlin there. The natural gas conversation continues in Brussels. We're waiting for confirmation of what that cap might look like. That conversation, believe it or not, ongoing. The pound is fairly flat, and I put this in because we had seen a bit of a tick higher in the pound earlier, Matt, on the back of some wage data that, if you exclude the pandemic, showed that wages in the UK rose in the month of October at their highest pace in at least 20 years. And so if you're looking for signs that inflation is on the wane, that's not going to be one of them.
No, definitely not. Also, excluding the pandemic, I don't know if we should do that quite yet. Let's get to FTX right now. The co-founder of the exchange is now in custody in the Bahamas. Sam Bankman-Fried was arrested yesterday after the U.S. government filed criminal charges. He'll now await extradition to the U.S. Bloomberg guests weighed in on his arrest yesterday.
Justice seems to be in process, which I think is welcomed by those in the crypto industry. It's actually moved very swiftly. I mean, this is actually all happening in just over a month, so they've definitely moved very quickly.
His arrestment this morning, or today at least in the Bahamas, is actually a sigh of relief for some of the crypto people. As more and more information comes to light, I suspect there is a good chance there'll be more people under the microscope for sure.
Joanna Ossinger, Bloomberg senior crypto reporter, joins us now for the details. So, Joanna, what do we know about, the arrest, the charges, and the timeline for extradition?
Well, Matt, we know he's being held in the Bahamas. We don't know a lot about the charges yet. That's going to come today. Federal prosecutors in Manhattan are planning to unseal the case against him this morning. So, excuse me. And the Securities and Exchange Commission separately has authorized civil charges. So we have these two ways that he is going to be charged, the criminal and the civil. And we'll see what the Bahamas plans to do. Extradition can take time. So we don't know a lot about the map for that yet. We also know, for instance, that the U.S. House will be continuing with its hearing today, even though Sam Bankman-Fried was going to be at that hearing and now is not.
Yeah, Joanna, as you say, we are awaiting the official unsealing of the case. We do have some reporting from the New York Times this morning that the criminal charges against Bankman-Fried included wire fraud conspiracy, securities fraud conspiracy, and money laundering. All of that, according to people familiar with the matter who spoke with the Times. So as we await the unsealing of the case, what else are we watching for with FTX, Joanna?
Yeah, well, Kailey, there are so many things to watch out for. There's what the House and what the Senate hearing that's scheduled for tomorrow will come up with. So what the legislators are focusing on, it'll be that this case is so complicated and what the different strands of it will reveal. What John Ray, the new CEO, comes up with. He's due to testify at the House hearing today. So it'll be interesting to see what he's come up with, whether he has a decent picture at this point or whether he's still kind of pulling pieces together and trying to figure things out. So there are a lot of pieces to it. And then there's also just the general malaise and the concern within the crypto industry overall. People are still pretty shell-shocked by this whole thing a month later. I mean, FTX was just such a big deal. And now it's imploded. And there are still a lot of people who are really coming to terms with it. And there's a lot of nervousness about if FTX could do this, what else could happen. So there are occasional rumors that still surface where people will say, oh, well, what about this? What about that? So the industry is still very much on edge, and that will take a while to resolve.
Okay, an industry on edge. Bloomberg's Joanna Ossinger, thank you very much. For more on Sam Bankman-Fried's arrest and the FTX hearings, join Matt and Kailey today on Bloomberg Crypto at 1 p.m. New York time, 6 p.m. in London. Certainly a lot to talk about. So that might be the fascinating water cooler conversation of the day. The market's focus is going to be on the U.S. inflation data. Investors are waiting for that. It could shape the outlook for the Fed and its interest rate hikes into next year. The Consumer Price Index data is out at 8:30 a.m. New York time and is expected to show inflation moderating. Joining us now with analysis, Valerie Teitel, our markets reporter. Valerie, what do we expect?
Hi, Anna. Good morning to you. Yes, so we expect a tick down in the headline on the year-on-year and the month-on-month number, but really the meat of this number really is going to be hitting in the core number, the core year-on-year. Now, we know that Powell in his last Brookings speech, he broke this core component down into three components. That's core goods, that's shelter, and that's core services less shelter. You can see here in my chart, we know that core goods has been deflating like a balloon almost for a year. And we know that shelter, he's kind of dismissed it, saying that this component lags.
Whilst things have certainly accelerated in the last few hours, I think many will feel, in fact, like Sam's arrest is, in fact, overdue. We need to flush out the bad actors. We really need regulation and to show that rule of law is important.
It's really a landmark case, and it will, in many respects, define crypto regulations for exchanges going forward.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas. U.S. prosecutors filed criminal charges and will now seek his extradition. Investors waiting for today's U.S. inflation data. The CPI print could shape the outlook for Fed interest rate hikes. And more job cuts on the way at Goldman Sachs. Hundreds of positions are likely to be cut from Goldman's money-losing retail banking operations. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, the session in Asia, some moderate moves there, modest moves here in Europe, really. We wait for the US session to really kick in, and certainly the data in the US session will be front and center, as will the crypto news flow.
Yeah, we'll definitely be watching those FTX hearings on Capitol Hill beginning at 10 a.m. Eastern time. But before we can get there, Anna, we have to get through CPI at 8:30. And really, the trajectory of inflation and what it means for the trajectory of Federal Reserve policy next year is really what the market is waiting for clues on. So as you said, not too much movement and conviction in Asia overnight ahead of that print. Yes, we were higher, but only by a modest about 0.2% on the MSCI Asia Pacific Index. Where your outperformance was coming from was Hong Kong. The Hang Seng up by about 0.7% as we continue to get incremental reopening news. Hong Kong scrapping that 3-day COVID monitoring period for incoming international travelers. So that lifted travel stocks in particular, like Cathay Pacific, the airline, which was higher by about 3% overnight. Finally, in the bond market, as it is an inflation day in the middle of a big week for central banks, we are seeing a little bit of upward pressure on yields. At least that was the case in the Asia Pacific. And New Zealand, the 2-year yield up about 5 basis points overnight to 4.67%. Matt.
All right, very interesting stuff. Right now, we're looking at gains on futures of just about 0.1%, but you're not going to see really a lot of movement in risk assets until the CPI print comes out. Then you could see a lot of movement in risk assets. In fact, over the past 6 CPI releases, you've seen the S&P 500 move 3% or more in either direction. So you've got a lot of volatility ahead if you are to judge by history. The U.S. 10-year yield right now coming down just about 1 basis point to 360.19, so not a lot of movement there either. There has been a lot of movement in crude. Yesterday at this time, we were looking at a 70 handle for WTI. Today it's 73.66. So since, in the past 24 hours at least, we've seen crude go up by about 4% to 73.69 a barrel right now. And then Bitcoin also continuing to gain right now, 17,382 after the arrest of Sam Bankman-Fried. Maybe some in crypto land feel that we can put a pin in that and move forward. So it does look like we continue to increase from the really unbelievable stability that we saw over the last month since the implosion of FTX. Anna, what do you see in Europe?
Yeah, it sort of fell fast and then didn't fall anymore, did it, Matt, on the Bitcoin front? Let's have a look at the European map then, Matt, and it does look like a holding pattern waiting for that CPI print later on today. That is the macro event of the day, and it is what we're waiting for. London is flat, Paris is flat, Frankfurt is up by 0.2%. Speaking of Frankfurt, we just got some German data. The ZEW investor expectations coming in at minus 23.3. So this is a survey of finance professionals and their expectations for the period ahead. It came in at that minus figure of 23.3. The estimate was minus 26.4. So maybe at the margin, just a little bit less gloomy than had been anticipated. Still a negative reading, still dominated by concerns around energy prices in Europe and the extent of the slowdown and recession that we are seeing in Europe. In terms of where the stock action is today, it is related to this. Brent crude up by 1%. And these are the energy names moving higher as a result. So once again, a day where we see not a great deal of news flow to trade around perhaps here in Europe, but we do have some movement on the oil price. And as a result, energy stocks go higher, up by 0.8%. We've heard from Russia, some Russian media reporting that they think they know what the Kremlin has decided when it comes to the oil cap, and they think that the Kremlin's decision there will be not to trade with countries that have signed up to that oil cap. Some of them don't want to trade in Russian oil anyway, but also not to trade with any country that references any kind of threshold. We'll wait for confirmation from the Kremlin there. The natural gas conversation continues in Brussels. We're waiting for confirmation of what that cap might look like. That conversation, believe it or not, ongoing. The pound is fairly flat, and I put this in because we had seen a bit of a tick higher in the pound earlier, Matt, on the back of some wage data that, if you exclude the pandemic, showed that wages in the UK rose in the month of October at their highest pace in at least 20 years. And so if you're looking for signs that inflation is on the wane, that's not going to be one of them.
No, definitely not. Also, excluding the pandemic, I don't know if we should do that quite yet. Let's get to FTX right now. The co-founder of the exchange is now in custody in the Bahamas. Sam Bankman-Fried was arrested yesterday after the U.S. government filed criminal charges. He'll now await extradition to the U.S. Bloomberg guests weighed in on his arrest yesterday.
justice seems to be in process, which I think is welcome by those in the crypto industry. It's actually moved very swiftly. I mean, this is actually all happening in just over a month. So they've definitely moved very quickly.
His arrestment this morning, or today at least in the Bahamas, is actually a sigh of relief for some of the crypto people. As more and more information comes to light, I suspect there is a good chance there'll be more people under the microscope for sure.
Joanna Ossinger, Bloomberg senior crypto reporter, joins us now for the details. So, Joanna, what do we know about, the arrest, the charges, and the timeline for extradition?
Well, Matt, we know he's being held in the Bahamas. We don't know a lot about the charges yet. That's going to come today. Federal prosecutors in Manhattan are planning to unseal the case against him this morning. So, excuse me. And the Securities and Exchange Commission separately has authorized civil charges. So we have these two ways that he is going to be charged, the criminal and the civil. And we'll see what the Bahamas plans to do. Extradition can take time. So we don't know a lot about the map for that yet. We also know, for instance, that the U.S. House will be continuing with its hearing today, even though Sam Bankman-Fried was going to be at that hearing and now is not.
Yeah, Joanna, as you say, we are awaiting the official unsealing of the case. We do have some reporting from the New York Times this morning that the criminal charges against Bankman-Fried included wire fraud conspiracy, securities fraud conspiracy, and money laundering. All of that, according to people familiar with the matter who spoke with the Times. So as we await the unsealing of the case, what else are we watching for with FTX, Joanna?
Yeah, well, Kailey, there are so many things to watch out for. There's what the House and what the Senate hearing that's scheduled for tomorrow will come up with. So what the legislators are focusing on, it'll be that this case is so complicated and what the different strands of it will reveal. What John Ray, the new CEO, comes up with. He's due to testify at the House hearing today. So it'll be interesting to see what he's come up with, whether he has a decent picture at this point or whether he's still kind of pulling pieces together and trying to figure things out. So there are a lot of pieces to it. And then there's also just the general malaise and the concern within the crypto industry overall. People are still pretty shell-shocked by this whole thing a month later. I mean, FTX was just such a big deal. And now it's imploded. And there are still a lot of people who are really coming to terms with it. And there's a lot of nervousness about if FTX could do this, what else could happen. So there are occasional rumors that still surface where people will say, oh, well, what about this? What about that? So the industry is still very much on edge, and that will take a while to resolve.
Okay, an industry on edge. Bloomberg's Joanna Ossinger, thank you very much. For more on Sam Bankman-Fried's arrest and the FTX hearings, join Matt and Kailey today on Bloomberg Crypto at 1 p.m. New York time, 6 p.m. in London. Certainly a lot to talk about. So that might be the fascinating water cooler conversation of the day. The market's focus is going to be on the U.S. inflation data. Investors are waiting for that. It could shape the outlook for the Fed and its interest rate hikes into next year. The Consumer Price Index data is out at 8:30 a.m. New York time and is expected to show inflation moderating. Joining us now with analysis, Valerie Teitel, our markets reporter. Valerie, what do we expect?
Hi, Anna. Good morning to you. Yes, so we expect a tick down in the headline on the year-on-year and the month-on-month number, but really the meat of this number really is going to be hitting in the core number, the core year-on-year. Now, we know that Powell in his last Brookings speech, he broke this core component down into three components. That's core goods, that's shelter, and that's core services less shelter. You can see here in my chart, we know that core goods has been deflating like a balloon almost for a year. And we know that shelter, he's kind of dismissed it, saying that this component lags, but the private metric indices of rent have been falling, so he thinks that there's positive work going there. Now, he really focused in on the services X rent component. It contributes nearly 50% to the core CPI, and its trajectory, he noted, is less clear. Now, why does Powell care about this? It's because most of the costs in delivering these services is wages, and we know that the U.S. labor market has been running very tight for quite a while now. Is it finally showing up in core services X rents? Is this something that's going to be stickier for longer? Look, Anna, I think this component is really going to lead the discussion whether we see a Fed pause at 5% in March, whether it's at 5.25% in May, or whether it's at 5.5% in June. All of that we'll see in the analysis and the dot plot that they release.
All right, Valerie, thanks very much. Valerie Teitel there, running us through what to watch for today. That all-important release coming out in 3 hours and 20 minutes from now. And, of course, we've got wall-to-wall coverage throughout the morning. Now, let's get to some bank news. Bloomberg has learned that Goldman Sachs is cutting hundreds more jobs. The Wall Street Titan is restructuring its struggling consumer business and bracing for an uncertain economy ahead. For more, we're joined by Bloomberg's Charlie Wells. Charlie, walk us through what we know about these cuts. Give us the headlines and the rationale behind them.
Yeah, well, Matt, blame the teddy bear. So that is what a former Goldman executive said he wanted Americans to think about when they thought about Goldman Sachs. And that was some of the reasoning behind pushing into a consumer banking sector, trying to bring out some of these consumer products. That proved to be very expensive. CEO David Solomon earlier this fall said that he was going to back away from those plans, that he was going to reorganize the bank. And this is the follow-up from that. This is as many as 400 jobs being cut in that consumer sector. And we know that Goldman had grown quite a bit over the course of the past 2-3 years. So in the third quarter, their headcount was 49,000. Now that's up 34% from 2018. The bank doesn't break out how many people work in that consumer sector, but we know looking at those numbers, 400 is a lot.
Okay, Charlie. So they wanted to be seen more like a teddy bear and less like a vampire squid, which I think was somebody else's analogy. So are these layoffs then specific to Goldman and they're pushing to retail banking, or is this something broader?
Yeah, Anna, that's a really good question, especially as we see so many questions about the economy ahead. And we know what's unique to Goldman, of course, was that very strong push into consumer banking that really looks like it backfired. But of course, when you look across the street, you do see job cuts, right? Morgan Stanley, we reported last week, cutting 1,600 positions. We heard on Bloomberg TV last week the CEO of Bank of America talking about a slowdown in hiring because people are not leaving roles. Now, what this all sounds like is that the talent war is over.
All right, Bloomberg's Charlie Wells, thank you so much, as always. Now, from the banks to some other stocks to watch, let's get a look at some movers in pre-market trading in the U.S. this morning. One of them moving higher being Oracle after its results. Its revenue topping expectations, thanks in large part to a strong performance in its Cerner digital health records unit. And analysts are really positive on the revenue growth the company is seeing given the weaker macro environment. So that stock is up about 2.3%. Another group of stocks really moving higher is energy. We are seeing oil prices rising for a second day, so that's giving a lift to some of those names, including Diamondback, EOG, and Occidental Petroleum. Diamondback and EOG each up in the ballpark of 2 to 3%. Oxy's up by about 0.75%. One stock moving lower, though, is Robinhood. This is after a downgrade at Citi, cutting the stock to neutral from buy. The analyst talking about a number of risk factors here, including headline risk with the SEC market structure proposals that could potentially change just a risk-off view in the equity markets overall, and then also risk of fallout from the FTX bankruptcy. So all that together leading to the view over at Citi, and that is dragging on the stock to the tune of about 2% lower before the bell, Anna.
Okay, nervousness for Robinhood investors. Coming up on this program then, Kailey, we will get back to macro themes. Nina Skero joins us, CEO of the Centre for Economic and Business Research. We'll talk about the UK data we've already had and, importantly, look ahead to US CPI. The UK story fascinating on wages. The US later, we'll talk about services prices and more on the arrest of FTX co-founder Sam Bankman-Fried. We'll get you the latest and more detail. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. We are looking at a CPI number today that could cause some massive swings. In fact, over the last 6 releases, we've seen the S&P rise or fall about 3%. So huge volatility, the likes of which we haven't seen since back in the great financial crisis. Some would say the GFC, but I don't know if we should shorten it to that. In any case, let's bring in Bloomberg Markets reporter Justina Lee right now to talk about what we expect in terms of the reading and the whisper number. Justina Lee, what have you got?
Well, expectations are riding high for the CPI number. Or rather, to be more precise, I mean, economists are still expecting, a rather high number, but at least it would show, slowing increase. And I think markets are really excited about this one after the bond and stock rebound we've seen over the past month or so. And that's already on the back of people expecting the Fed to at least slow monetary tightening at the next meeting. And so if we get a disappointment in the form of, like a higher than expected CPI, I think we could expect the markets to take quite a big hit.
Okay, so we're looking for that core year-on-year number, excluding food and energy, to tick down from 6.3 to 6.1%. These are the numbers that our colleague Valerie Teitel was telling us we should watch out for. And in particular, a focus on services, because, the good story seems to have been post-pandemic, not done and dusted, but certainly we've traveled a long way on that one. The services sector, maybe we're still in the throes of that inflationary impulse. Is that what you're going to be watching for?
Right, exactly. And it's kind of interesting because, as I mentioned, people are expecting a slowdown in CPI. But at the same time, as we've seen in the recent economic reports, it's not like we've exactly gotten the all clear just yet,
PPI,
right?
PPI, for example.
Exactly. I mean, we just saw the big market reaction to those sets of numbers. And even before that, I mean, the last jobs report is still showing quite a hot U.S. labor market. And so altogether, I think people are, will be pretty disappointed if we kind of see a further acceleration.
Kailey.
So, Justina, we talk about the volatility we're seeing off the back of all of this data. And on the subject of volatility, looking at the VIX, which is back up at a 25 handle, that move yesterday in tandem with a 1.4% gain for the S&P 500 was the first time since 1997 when both climbed in sync as much as they did. What should we make of that kind of behavior?
Yeah, I mean, the VIX has been quite a bit of a mystery this year because even when the stock market was falling, the VIX actually stayed, I think, lower than what a lot of investors would have expected. And I think there is sort of a contrarian read on that, in that, in a way, the VIX is a sign that there is more hedging going on. But could there be more hedging going on because there are more people coming back into the market and requiring those hedges? I think that's possibly another interpretation, given that, the returning inflows that we've seen over the past month.
Okay, Justina, thank you very much. Bloomberg's Justina Lee joining us there with market analysis, looking ahead to the CPI data. And for more market analysis, they will be all over that CPI print later on today. MLive is the place to be. The Markets Live blog, MLive Go, is the function to use on the Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. China is warning that it faces a big jump in COVID cases. The country is rapidly dismantling pandemic controls, and it's reopening faster than some experts had anticipated. One of China's top health advisors says if the majority of people become infected within just a few months, there will be a severe strain on the medical system. The European Union has reached a preliminary agreement to send $19 billion in aid to Ukraine. A logjam was broken when Hungary dropped its opposition. In return, the EU agreed to approve Hungary's pandemic-era recovery plan, which gives Budapest more than $6 billion in grants. In the UK, the government is warning of significant disruptions in the National Health Service. Both nurses and ambulance drivers are preparing to go on strike in the run-up to Christmas. Some 600 members of Britain's armed services are now being trained to drive ambulances. Public sector workers, of course, are demanding pay hikes that keep pace with inflation. And Bloomberg has learned that Elon Musk's SpaceX wants to sell insider shares at a price that would raise the company's valuation to about $140 billion. That compares with a valuation of $127 billion in July. SpaceX is the most valuable private company in the U.S., and it dominates the market for commercial space launch. And Matt, of course, SpaceX, a private company. Twitter, now a private company. You also have Boring and Neuralink. All of these enterprises that Elon Musk is at the helm of, and one of them a public company, Tesla, which raises yet again the question of key man risk for that stock, considering he is very, very busy.
Yeah, very busy. And if you look at the value of the public company, it should be noted that it's fallen by half, right? Tesla has lost about $500 billion in market cap over the past year as Elon Musk shifts his focus to Twitter.
Yeah, absolutely. I was just wondering how on earth you go about valuing the opportunities in space as you'd have to do to try and put a value. If it were in the public space, that's what you'd have to do with SpaceX. We don't have that problem, perhaps, with it not being in the public markets. We will come back with a conversation about the macro, focus very much on what's going on in US CPI. That's the data print that really matters later on today. Nina Skero joins us. We'll talk to her, the CEO of the Centre for Economic and Business Research. We'll also recap the UK wages story, which is an interesting cautionary tale for tight labour markets. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas. US prosecutors filed criminal charges and will now seek his extradition. Investors waiting for today's US inflation data. The CPI print could shape the outlook for Fed interest rate hikes. More job cuts on the way at Goldman Sachs. Hundreds of positions are likely to be cut from Goldman's money-losing retail banking operations. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. It's really all about the data, Matt. We're waiting for that CPI print a little bit later because, of course, it comes just ahead of the Fed, just after the PPI print, which really did spook markets.
Yeah, absolutely. I mean, we are waiting. A lot of traders tend to sit on their hands in these situations, maybe turn off the algorithms while we look for the release. Right now, S&P futures up about 1/3%. So we're seeing a steady climb there on futures. The 10-year yield, on the other hand, coming down as investors buy bonds as well. So 359.64 is the level there. I'm not sure how important the proximity of the CPI report to the Fed is. I've been thinking about that since I listened to your radio program this morning. But certainly it adds to the volatility of this week, right? And maybe that's why investors are loading up a little bit on debt as well. NYMEX crude up more than 1%, now a 74 handle. 24 hours ago, we were looking at $70 and change for a barrel of West Texas Intermediate. So a lot of volatility in this asset as well. And then Bitcoin has seen very little volatility since the initial plunge after the collapse of FTX. It hung around the $16,000 level. It now is steadily climbing higher, $17,500. Very interesting after the arrest of Sam Bankman-Fried. And, of course, we're awaiting those charges to be unsealed today. Kailey, what do you see in the pre-market movers?
Well, you were just mentioning how oil is about $4 higher than it was about 2 days ago. So that is giving a lift to some of those energy names in pre-market trading. The likes of Occidental Petroleum and Diamondback and Exxon, they are all higher. And the Energy Select Sector Spider ETF, which really gauges how the sector as a whole is performing in pre-market trading, is higher by about 0.5%. Other stocks on the move up include Oracle. It reported after the bell yesterday, revenue topping expectations thanks to its health records unit. So that stock up about 2.4%. And then you have some of those big Chinese technology companies with U.S. listings moving higher as well. Of course, that follows some gains we saw in Asia overnight. Hong Kong, the incremental reopening news today as they lift some of those COVID monitoring restrictions for incoming international travelers. So that's giving a sentiment lift overall to the likes of JD up about 1.6% and Bilibili higher by about 2.25% before the bell as well, Anna.
We're just getting some news lines coming through from the Financial Stability Report, Kailey, here in the UK. The Bank of England putting out this this review of stability in the UK economy. The Bank of England calling for urgent action on LDI regulation. You'll remember that this was all to do with the pensions industry in the UK and some of the hedging products that it used, and it was part of the reason why the Bank of England had to step in with a rising gilt yield environment at the end of September post the mini-budget. So they're calling for more regulation there. They're also saying that the UK gilt market liquidity remains poor versus the first half of 2022. 4 million UK households will see mortgages rise in 2023, according to the Bank of England. So that's what we have on the financial stability front. Interesting to see if they say anything about crypto. That was something that was very topical last time around. Quick check on where we are on European markets for you then. We have the European equity market session up by 0.5%. Brent crude up by 1.4%, lifting energy stocks, $79 a barrel there. The gas price is in focus because the energy ministers are meeting in Brussels to talk once again about whether they can agree a cap. 275 euros was where the Commission wanted to put it. The member states remain divided on that one. And the pound, 122.87. Actually, we saw a bit of a tick up in the pound on the back of some of the UK data we got earlier on today. And that's where we go next in our conversation. UK wages accelerated in the 3 months to October at a record level, but still fell short of double-digit inflation. Joining us now is Nina Skero, CEO of the Centre for Economic and Business Research. Nina, very nice to have you on set with me here in London. And let me ask you about the wage story in the UK, because it matters in the UK, matters for the Bank of England, but it's also going to matter if you're looking at tight labour markets in other places, perhaps. Wages proving pretty stubborn. If you're looking for reasons to be nervous about inflation here in the UK, that it still hasn't topped out, then you can certainly look at that wage data today. Did it worry you?
That aspect of the release a little bit, but I do think there was another finding in this morning's labor market release, which is on the activity rates, and that people are very slowly, but at least, there is some initial trend of people going back into the labor market from the ones that have dropped out during the pandemic. And I do think in the longer term that could have the opposite impact on inflation, because I do think that's going to be something that we're really going to need if we're going to see wage rises normalize. We're going to need to see more workers coming back and basically starting to fill some of the vacancies and create more competition in the labor market.
Yeah, absolutely fascinating to see here in the UK and in the US what keeps labour on the sidelines with inflation at these elevated levels, Nina. And I know a lot of labour market economists have been writing about that of late. What about where this leaves the Bank of England? It doesn't sound as if your thinking is all that moved by this data set this morning on the UK labour market. And we do face the possibility of a four-way split then at the Bank of England. Some people calling for no change, some 25 basis points, some 50, some 75. What are you expecting come Thursday?
Inflation is still quite high, but the Bank of England has been very clear that it's really worried about the economic outlook. And in fact, on labor market, on the extent of the upcoming recession, it's been significantly gloomier than a lot of private sector forecasters. So I think they're going to do the least they can get away with. In a sense, there's still a need to act to control inflation. I think 75 basis points would be, in their judgment, be too much. 25 would be too little. I do think there's going to be some consensus around that middle ground of a 50 basis points hike later this week.
How transitory, Nina, do you expect energy inflation to be? Are we still going to be worried about gas prices next winter?
I expect that we are, and we're not expecting the situation to normalize into 2024 in terms of energy prices. It is hugely dependent on what we see on the policy side in terms of impacting the effect that has on the actual sort of how households feel the level of those rising energy prices. We've seen from the newish chancellor that the support he's planning on extending isn't going to be as long as was previously announced. So there's still, I think, energy prices are going to be elevated well into 2023 and, in fact, into 2024. But in terms of how that impacts inflation, how that impacts household spending, there's still more to be seen in terms of what comes of the support packages.
Yeah, I was thinking about how economists react to price caps, generally, but even more specifically when it comes to gas. Is it a concern for you? The unintended consequences. Typically, at least historically, price caps haven't worked out terribly well.
It does break down that mechanism of basically prices are going up, and then that's signaling to households that there is a need to save energy and to alter your behaviors. I think the argument here is that price rises are so severe that that's a risk that the government is willing to take, and that signaling mechanism is still there, given that even with the price cap, households are seeing much higher prices than they were this time a year ago. So although that mechanism has been weakened by the price cap, it hasn't been eliminated.
Nina, if we could shift our focus to here where I am in the U.S., obviously inflation data is coming up less than 3 hours from now. How could the data today change the outcome of the Fed decision tomorrow, if not the actual size of the Fed's last hike of the year, what the dot plot could look like?
I think it would take quite a big surprise for the Fed to change its trajectory now. They've very much sort of talked themselves into, I think, a 50 basis points hike. So even if we don't see inflation reach that 7.3 level, which I think I would agree with the consensus on this occasion, I think as long as we're seeing any side of inflationary pressures starting to moderate, we're going to see sort of a 50 basis points hike at the next meeting. There is more of a chance of a change trajectory for early 2023. At the moment, we're expecting rates to rise to 5% and then not really beyond that. If we don't see inflation tick down as much as expected, that could rise to 5.25, 5.5, and then also extend the trajectory before the Fed actually starts cutting. But I think in terms of this next meeting, the situation seems pretty set.
Okay, so it's going to be 50 basis points tomorrow, essentially, is what you're saying. It is now a question of how high they ultimately go and for how long they stay there. Nina, in your assessment now, having not seen today's data yet, do you expect them to start cutting in 2023?
If they do start cutting in 2023, I would expect it to be the very, very back end of 2023. We do actually expect rates at 5% throughout all of next year, because we have seen some sort of a little bit mixed data from the U.S. We've sort of seen that PPI has not really taken the direction that many were expecting it just a few days ago. And also, the economy seems to be actually faring somewhat well given the extent of tightening we've seen so far. So there also isn't that incentive to sort of rush in and try supporting growth, which seems to be actually responding relatively well. I mean, the sentiment is holding up. The situation, doesn't seem to be deteriorating as much on the back of the monetary tightening.
Nina, I just want to ask you about the vulnerabilities around the housing market. I was just looking at the details coming through on the financial stability report from the Bank of England. I mentioned some of them around LDI, concern there, and concern about a lack of liquidity in gilt markets in some places. They've given us a bit of size and scope on the impact of the UK mortgage market of the higher rates. Within 3 years, they say 70% of mortgage holders will see their payments increase. And we know that the UK labour market is very vulnerable because of variable interest rates, or at least very short windows of fixed rates being quite typical. Other housing markets are more protected from these things, like the US and maybe other parts of the world. Your thoughts on the housing sector and vulnerabilities there?
I think that is definitely a big thing that the Bank of England is keeping in mind, because as you say, they need to keep it in mind to a greater extent what their decision is going to mean for the mortgage markets than in other countries. And ultimately, when they have to make these trade-offs in terms of the level of the pound, in terms of what their rates are going to mean for people paying mortgages, they do put more weight on the housing market, because ultimately if they have to make this call between crashing the housing market or weakening the pound and seeing inflation soar, they do tend to sort of steer away from having too much of an upside shock in the rates, specifically because so few people have fixed mortgages beyond the 2-year period.
Okay, Nina, thanks very much. Thanks for your thoughts this morning. Nina Skero, CEO of the Centre for Economic and Business Research here in the UK. Now, coming up on the programme, FTX co-founder Sam Bankman-Fried has been arrested in the Bahamas, as we have been discussing. We will get you all of the latest, what we know and what we're waiting to find out later on today. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with CFTC Commissioner Kristen Johnson. That's at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
His arrestment this morning, or today at least in the Bahamas, is actually a sigh of relief for some of the crypto people. It's going to be good for the industry because we need to flush out the bad actors. We really need regulation and to show that rule of law is important.
Bobby Lee there, founder and CEO of Ballet Crypto, speaking with Bloomberg on the arrest of FTX co-founder Sam Bankman-Fried in the Bahamas. Bankman-Fried's arrest comes after weeks of speculation that FTX's client funds were misused before the crypto exchange collapsed. Sonali Basak, our global finance correspondent, joins us now in Washington, D.C., where she'll be covering the FTX hearings. At this point, it looks like, Sonali, without SBF.
We do have FTX CEO John Ray slated to speak today at the House committee. And remember, as we know, SBF himself, Sam Bankman-Fried, was slated to speak virtually this afternoon. We know that Maxine Waters, the chairman of the committee, had said also that him not being there might not allow a lot of consumers here to get the information they would have gotten if he were to testify under oath. But with that said, we will get a lot more information today as well, Matt. We are waiting for the unsealing of an indictment from the Southern District of New York. It's something that we have said that we would be expecting, according to Damian Williams, U.S. Attorney here. We also know that the SEC has its own civil case as well, and so authorities themselves may provide more information. And as we know, the testimony of the new CEO, John Ray, has also indicated that there are certain things that FTX had done, particularly the commingling here of funds, that they had alleged here in not just the bankruptcy filings, but also in the testimony that we expect him to give today to the House.
Well, and also the lawyers here in the U.S. are claiming that the Bahamas had asked Sam Bankman-Fried to mint new coins before he was blocked from FTX systems. Sonali, what do you make of that story and the idea that he perhaps minted millions of dollars worth of digital coins and then transferred those tokens to control of island officials?
I think it's an interesting question here because we know that the Bahamas here is working on an extradition treaty. We know that they have arrested him last night, according to the Royal Bahamas Police. But they also said in their statement here that they are going to continue its own regulatory and criminal investigations when it comes to Sam Bankman-Fried. So we know there's a few things going on here at the same time. We knew earlier in this bankruptcy process there was some concerns about jurisdiction, but now as a U.S. is filing criminal charges here, and according to the New York Times, that includes wire fraud, it includes conspiracy of wire fraud. So we know here that there is some sense of the two nations really working together when it comes to Sam Bankman-Fried, but the Bahamas itself, especially in light of that story, Kailey, is still pursuing its own investigations.
Yeah, that's going to be an interesting one. And we'll wonder if we'll get more details from John J. Ray when he speaks later where you are, Sonali. So we won't hear from Sam Bankman-Fried, but we have at Bloomberg seen a copy of what he was planning to say. And he was planning to use in fairly colourful language, well, to say in pretty colourful language that he messed up, but more colourful than that. And we know that he has said previously that he's admitted major managerial missteps, but said he never tried to commit fraud or to break the law. These are the things he's already said in the media. So I guess we had some sense of the type of arguments that he might have used had he been about to testify where you are.
There was a lot of blame given here in that testimony that, again, is not posted on the website. It was obtained by Bloomberg. There was a lot of blame here to the Chapter 11 committees and the folks who have taken over after him for locking him out of the data that would have been necessary to give a fuller account, according to the testimony obtained by Bloomberg. Now, I would also say he did have a lot of media appearances as early as hours before he was arrested. He had appeared on a Twitter Spaces yesterday where he was asked about the timelines that FTX had undergone and the tweets, the deleted tweets that were taken down that explained about the details here about holding customer assets one-to-one and what else went down in those final days in November before the bankruptcy filing had pursued. Now, he did say yes, but to a lot of things. And so a lot of explanation that we did not get as to how those final days really had unlocked itself. And remember, he's blaming it now on the idea that he just doesn't have the data anymore as required to give a fuller account because now FTX has
someone had to know, right, Sonali? And the interesting thing is, at least according to the New York Times, the criminal charges include wire fraud, conspiracy, securities fraud, conspiracy. And yet the indictment, according to the NYT, only one person is charged. Are we waiting for other names to come out?
I think that's the red herring here. That's the million-dollar question about whether he acted alone or who else had acted with him here as they allegedly had commingled funds. We will see. Remember, there was that Australian Financial Review story yesterday that had talked about kind of this set of secret messages that was among Sam Bankman-Fried and his top deputies, where I believe the name of the chat on Signal here was wire fraud. And he did deny that report publicly. It is actually his last tweet prior to the arrest. And so I don't expect that he will be able to tweet as publicly from now on, but he did deny that report, but that certainly is out there.
Sonali, at the end of the day, all of this is backward looking, right? We're trying to figure out what happened in the past. For the rest of the industry, it's a question of the future. And to bring it back to the hearings that you will attend today, how much do we expect lawmakers to focus on the future and regulating and legislating this industry as we look forward?
A lot. Remember, this is giving lawmakers a set of a roadmap here as to what could or should have been done to protect consumers at the end of the day. That is what they're most worried about. This is all in the overlay of what happens in the United States in terms of tokenization of some of these assets. Are they considered securities if you are looking at tokens? There's a lot of fear here when it comes to how the SEC might handle those assets. The CFTC as well, that's a big question when it comes to the Agriculture Committee and how they look at some of these assets as potential commodities or the futures that are tied to these assets and whether they require more regulation, given that the FTX entities here in the United States were largely regulated by the CFTC. Now, there's that, but then remember, there's also the Senate committee tomorrow, guys, where you'll hear from Kevin O'Leary, who is a paid spokesman for FTX, as well as more academics tied to the industry. So there's going to be a sense of what did they see and what didn't they see and how the practices of the industry should change from here.
All right, Bloomberg's Sonali Basak reporting from Washington. Looking forward to your coverage throughout the day. Thank you so much. And of course, we will have more on Sam Bankman-Fried's arrest and the outcome of those hearings on FTX. Join us today on Bloomberg Crypto at 1 p.m. New York time, 6 p.m. in London for a full breakdown. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. We're almost wrapped up here for the hour, but let's take a look at what's coming up for the rest of the day. France is hosting a Ukraine donors conference in Paris, where we'll hear from President Macron and Zelensky later on. At the top of the next hour, Bank of England Governor Andrew Bailey will be giving a briefing on the latest financial stability report. Then the big data event, 8:30 a.m. Eastern, will get U.S. CPI data. Evidence of disinflation in the headline and core print should continue to build in November. At least that's what the markets and the Federal Reserve are hoping for. And then finally, the House hearing on the collapse of FTX starts at 10 a.m. Eastern. Sam Bankman-Fried, of course, was arrested in the Bahamas yesterday. We'll have full coverage of that on Bloomberg Crypto later today, Matt. But while we will definitely have our eyes on Capitol Hill and on that hearing, the broader markets are going to be waiting for that CPI number.
Yeah, absolutely. The CPI number is crucial to markets, and the Sam Bankman-Fried arrest and the hearing that we get on Capitol Hill is maybe just more interesting in terms of finding out what exactly happened. It'll be great if we get some regulatory guidance from Congress and the Senate. So I guess that's what we're really waiting for in terms of news that matters, Anna.
Yeah, absolutely. And the unsealing of the charges against Sam Bankman-Fried, we'll wait for that. We'll get that early U.S. hours, we understand, so that'll come fairly soon. That is it for Early Edition. Surveillance is ahead. They'll, of course, be building their way towards that CPI print, bringing you all of the data when it lands. This is Bloomberg.